his Uber driver was had this phone on the steering wheel and was looking at it whenever the car stopped, and then they had a whole conversation. And the guy was pretty confident about his trades.
So this was FNO. If you are losing money while trading in FNO or trading stocks and continue to lose money, it's like an escalation of commitment. You have put in so much time, effort, and money into it. You don't want to withdraw. It's like being in a bad relationship. 9 in 10 individuals, which is 90% of these investors, would have lost money.
And in fact, when you think of FPIs making money at the expense of Indian retail investors, it's almost like a second East India company. There's a drain of money that's taken from the pockets of the smallest, most vulnerable people.
If these guys are starting at these kind of salaries, then it's not very surprising that they want to earn an extra income through FNOs. Because that thought that my time will come is a very strong one at this point. Apna time aayega. That I think keeps driving people into making bets where they essentially end up losing money. Hello and welcome to Moneynomics with Mint. I'm Vivek Kaul and I have with me Neil Borate. Hi Neil.
Hi Vivek.
So, Indians have taken to trading in stocks and financial options like never before. And I have a lot of data to offer to our viewers and listeners. But before we do that, you told me two interesting stories, before we started recording this podcast. So why don't you sort of recount those stories for our listeners / viewers as well?
Yeah. In fact, as you put it really well, Vivek, we've become a trading nation. So the first story is basically someone I know had got into an Uber and...
it wasn't you?
No, it wasn't me.
Oh, okay. I always thought it was you. So
it was somebody who didn't want to be quoted.
Okay.
So, but he told me that his Uber driver was had this phone on the steering wheel and was looking at it whenever the car stopped, and then they had a whole conversation. And the guy was pretty confident about his trades.
So this was FNO?
This was FNO.
So I had a sort of a similar experience in July when I had gone to visit a friend and I ran into this cab guy, but it was a Sunday. So he wasn't like trading, it wasn't possible to trade on a Sunday. But halfway through the trip, he started giving me tips and, started explaining to me his method as to how, every day he looks at the market at 2:30 p.m. and then he looks at this indicator and then he makes money. And then, we finally ended the conversation by him saying that, Abhi, kuch din pehle I made 2 lakh rupees in a single day. So my question to him was, then why are you sort of, if you have the ability to make 2 lakh rupees in a day, why are you driving a cab? You should concentrate your effort on making 2 lakh rupees a day. So his explanation was ki, sir, Sunday tha, so I was feeling bored. And so I just took this out for a spin.
Yeah. So it isn't even that rare anymore. Like there are Instagram accounts of rickshawalas trading F&O. Now the second story, and this is somebody that I spoke to directly, and it's kind of heartbreaking. So typically when we think of F&O traders or what we think of retail, dumb F&O traders, we think of people who have no knowledge of finance, seen a couple of videos and onto trading. But this guy had all the ingredients of a smart trader. He had done his MBA from a good institution.
Which is there are no guarantees.
But if you had to think of a profile of somebody who might actually be successful, right? MBA is part of it. Good institution is part of it. He then had worked for banks. And in fact, his first sort of trading capital came from the fact that the bank was giving loans to its employees at a very concessional rate. Up to a certain amount, I think it was 1 lakh that time. And he felt that if he's getting money at 5%, chalo, why not put that money in F&O and earn 10, 12, you earn a nice spread. For him, that journey was quite long. So he sort of was trading on and off for about 8 years. And it's not like if the losses happen in year 1, then you're probably out of it.
Right.
But in his case, and in a lot of other cases also, it's up and down. You make some gains and you're wiped out. Then you think you'll recover the money. You put in some more money and then you carry on like that. So after his MBA, he moved to Mumbai, and that time he was paid 50,000 rupees a month by the bank, his employer. and there was a lot of family pressure, peer pressure. He just felt he needed to earn some extra money. That was the thing that kept him trading. And as the losses began to mount, he began to borrow more explicitly. So he took personal loans, he took several credit cards and just kept paying the minimum balance due. And so this could go on a lot longer than his own money, his own savings that were there beyond those savings. Then, of course, came a time when he actually did run out of money. And by then, his wife also knew about it. They had to deal with it as a family. And the banks, I mean, the loans began becoming overdue. So the banks typically outsource these collections to agencies. And the way that the agencies operate is they shame you. So they go through your social media accounts, and whoever they can find, they start dropping messages, they start calling. His friends, family, his employers also began to be called. By then, he had switched 2 or 3 employers, but they found out who his current employer was and began calling the employer. It was really humiliating. But thankfully, then the system realizes that you are bankrupt and just harassing you is not going to get the money back. So then they start making settlement offers. So he's got the first few settlement offers, and he's confident that eventually all of the banks will settle. And at some point, he will be out of it, out of this debt. And he's young, he's 32, so he can still build up some savings for the rest of his life. But in the interim, I mean, it's put him through hell. The whole system has put him through hell. He tried, by the way, he tried all kinds of courses, nothing worked. So that is, I mean, he's just emblematic of what's happening up and down the country today.
How much did he lose?
He lost 60 lakhs.
Wow, that's a lot of money. So this story sort of it's like a if you are losing money while trading in FNO or trading stocks and continue to lose money, it's like an escalation of commitment. You have put in so much time, effort, and money into it. You don't want to withdraw. It's like being in a bad relationship. It's like starting this book which 100 pages in that is not worth the time, but you still want to finish it because you've already started it.
The sunk cost fallacy.
The sunk cost fallacy, basically, that's what the psychologists call it. Yeah, I mean, this is quite a a great story. It's a very sobering story as well at the same time. So Neil, while the turnover on the stock exchanges has gone up, that doesn't totally tell us the gravity of the problem. So the Securities and Exchange Board of India, which is the securities market regulator, recently came out with a consultation paper. And in that consultation paper, they offered, or rather shared, data regarding more than 92 lakh investors who invested in index derivatives in 2023-24. So basically, you invest primarily in options whose value is derived from stock market indices. So these people lost a total of 51,689 crore. That's a lot of money. And the other data point that's very interesting here is that 85 out of every 100 individuals trading in index derivatives lost money. And this does not take the cost of trading into account. So once you take the cost of trading into account, nearly 9 in 10 individuals, which is 90% of these investors, would have lost money. Now, to essentially give you a scale of how big these losses are, I'll quote Anant Narayan, who is currently the whole-time member of SEBI, and he said in a recent speech that the net trading loss borne by individuals is nearly a third of the net inflows into growth and equity-oriented schemes of all mutual funds during 2023-24. I mean, I checked these numbers; it's around 29%. So, around 30% is the right number. And these are huge numbers, and something like this is happening even with people who are doing intraday trading in stocks, right? So that number is not as scary, given that 71% of those investing in the intraday cash segment lost money in 2022-23. So this is not 23-24 data, and this proportion was at 65% in 18-19 and 69% in 21-22, telling us that more people are losing money. So what is happening here, Neil?
So Vivek, typically what happens is that because there are weekly expiries of options and they are all expiring on different days of the week, every day there is a new expiry to trade around. And the most common strategy is that they sell these options just before expiry when they're like super cheap, and assume that, look, they're not going to breach the level at which you've sold the option, so you're going to pocket some easy money. So, just to give our viewers an idea of what I mean by selling an option, essentially you're betting on the fact that volatility will remain low. Like, let's say that you've sold an option that the Nifty will not cross,
A particular level.
yeah, whatever, 25,000. And it does not, then you pocket the premium of that option.
You're writing an option,
You're writing an option.
which is a very dangerous thing to do for a retail investor
Yeah.
because, while the upside is limited and the downside really is not
Correct.
limited. So then who's making this money? I mean, because see, all stock market transactions have two sides to it. So if someone is losing money, someone's got to make some
Yes,
money, right?
yes.
So who's making this money?
Correct. So, two kinds of people that SEBI has identified. One is the high frequency traders. And by traders, we mean firms that have access to a lot of high frequency machines and technology. And of course, foreign portfolio investors, like Jane Street, for example, in the US. And in fact, when you think of FPIs making money at the expense of Indian retail investors, it's almost like a second East India company. There's a drain of money that's taken from the pockets of the smallest, most vulnerable people into the pockets of big.
But that's how markets work, right?
Well, yeah, but it's particularly egregious here given how widespread it is.
But again, you raised this very interesting point. If that is the case, why is there no hangama happening?
So thankfully, SEBI is clamping down on it. It has proposed certain measures, only allowing, if I remember correctly, one index to expire in a week, not every day to be an expiry day. But more needs to be done. There's no doubt about that.
In fact, the other interesting thing I realized was that a lot of people who are losing this money are youngsters. So, I mean, I was looking at some data that the National Stock Exchange released recently, and what it tells us is very interesting. That as of March 2020, people under 30 made up around only 23.5% of all registered investors, so which is like less than one in four. Whereas as of July, this stood at around 39.9%. So 2 in 5 investors in the market right now are less than 30 years of age. And a bulk of these guys have come in only after 2020. So as individuals, they have only seen the market go up in one way from 2020. So that experience that markets can also crack and crack big time is simply not there. So that is it's not a great thought to have. So
I agree. And many of them are led by influencer videos that give superficial knowledge of trading. And the influencers themselves are incentivized by these affiliate links. So the influencer, as we discussed before, puts a link, and if you open your account through that link or if you trade through that link, then every time you trade, that influencer gets a cut of the commission. Now, very recently, the National Stock Exchange has stopped this, probably on the urging of SEBI. But this has gone on for years together.
So what you're basically saying, Neil, is that if influencers put out links, and if I, as a follower, click on that link, I end up opening a trading/demat account with a particular broker. And when I sort of use that account to trade in FNO, then the commission that I pay the broker is shared with the influencer, right? This is the mechanism of it.
That's right. That's right.
But-
And just two more points to this. So normally the incentive is that they say, "Oh, use my code and get a discount," but you don't realize that in the long term you're actually paying a lot more than that discount through commissions, because the broker makes a commission whether you win or lose. That guy is getting paid.
I think the other interesting thing that I can conclude from what you just said is so there seems to be a quid pro quo, in the sense that while the influencer puts out a link, etc., but he makes money only when the followers trade, right? And that trading is essentially encouraged through these videos that they do, in which they say that it is, come to the stock market where it is very easy to make money, where it is very easy to become rich. So in that sense, they are indirectly being paid for making these videos.
They are.
Right. Because unless they make these videos and incentivize and encourage their followers to go out and trade, they don't really make much
That's
money
correct.
in the process, right? And the broker also doesn't make money. So, the other thing that I think also plugs into this is what is known as a rebate. So, what is this rebate business, and how does it essentially plug into all this? So, Neil, tell me one thing: why are you youngsters so attracted to FNO?
I'm glad you think I'm young, Vivek, but
Everything is relative in life. You are much younger than I am, so
I think obviously the profusion of smartphones and cheap internet is a big factor. And it's really easy to open a broking account. It takes 2 minutes of KYC and you're done. Even 10 years ago, you'd have to send like bunches of documents.
I have a confession to make here. For many years, I just the process of opening a broking account was what held me back. And then I finally opened one during the pandemic, and it just took me half an hour, and I did it like post midnight, from 12 o'clock to 12:30. I logged on and it was done. Whereas
Yeah.
in before, I can tell you of a time in 2005 or even 2010 when the process was quite killer.
Pain.
It was a pain. Also, the other thing that the other change that I have seen is that the user interfaces now are much simpler. If you look at if you had looked at the user interfaces of legacy brokerages 15 years back or even 10 years back, in fact some of them even now, they were absolutely horrible. I mean, a person like me would never be able to trade on such an interface, or even invest for that matter.
Yeah.
So I think these things have also really essentially made the process of trading in futures and options and of carrying out intraday trading in the stock market very easy. So this seems to be a major factor which is essentially getting the youngsters in. I think the other thing, and this might sound slightly speculative, is the fact that my guess is that the high youth unemployment in the country also probably has a role to play here. And if not youth unemployment, then the fact that starting salaries, if you look at a sector like information technology, which is a reasonably big employer, and the starting salaries in that sector are very similar to starting salaries almost 22, 23 years back. I mean, I can tell you for a fact that in 2000, when the dot-com crash happened, and in 2001 when the telecom crash happened, the kind of salaries the IT companies were offering at starting levels were very similar to the salaries which are being offered now. Now, I mean, that can also be a function of the fact that the skill set of a large number of engineers coming out in India is not really great. But anyway, if these guys are starting at these kind of salaries, then it's not very surprising that they want to earn an extra income through FNOs.
Yeah, I agree.
So what do you think is, I think this is the final or at least the second last point that we will discuss before we close. So, the base rate for success trading FNOs is very low. SEBI data clearly shows that 9 out of 10 investors lose money.
The odds are very low.
Right. Intraday trading, it's 71 out of 100, 7 out of 10 lose money. So when the base rate is so low, why are so many people going out there and punting? What do you think?
Everyone thinks that they are in that successful 10%. Somehow magically, everybody.
Basically, in our minds, we are all Salman Khan. So if I were to put it slightly
Yes.
differently.
Yes.
Actually, that's a very interesting point you make. Also, I think the other point that essentially needs to be made here is the fact that the overall mahal, the narrative in place is so positive that stories essentially shine more than data. So the SEBI data just gets killed there, because you have fund managers coming out every day and saying that this is the best rally that has happened and how can you miss out on this, and you have politicians making such remarks, you have even regulators making such remarks, influencers obviously are there all the time. So I think what happens is that even if a individual is losing money, the environment around him or her or them is so positive that in their head they think that it's probably a one-off thing, or probably they are the only ones who are going through this, and which is why their luck might soon turn. And which is why if the example that you took of this guy who lost 60 lakhs, he could have easily stopped in the third or the fourth year, right? But he still went on for 8 or 9 years, because that thought that my time will come is a very strong one at this point. Apna time aayega. That I think keeps driving people into making bets where they essentially end up losing money. And that's not and that's not good, because a lot of these guys are just starting their careers and jobs, and so I find it very I find it very disturbing. But such are the times that when you make a slightly, or rather what is not an optimistic point, people do not tend to like it. So any more thoughts, Neil? Anything else that you would like to add?
No, I think it's the main thing that SEBI needs to tackle is the influencers, because you can make the product as difficult as possible, but as long as the narrative supports F&O trading, it will go on.
So I think the narrative point you make, Neil, is very important, and the SEBI needs to puncture this narrative. And the one way to do that, and I've written about it in the past, but there's no harm in sharing it all over again, is that they need to put out data on the proportion of people losing money while trading in futures and options on a more regular basis. So I probably putting out monthly data will be difficult, but if they put out data even every quarterly, and if they sort of ensure that it gets hammered in everywhere, so that essentially will start puncturing the narrative a little. Because right now what happens is that the stories take precedence, and it's only when when you and I write something, we end up sharing SEBI data. So it's like a parallel example to this would be like how the Ministry of Finance used to share the goods and services tax data. They just hammer it left, right and center. You get WhatsApp forwards where it's a matter of pride that so many lakh crore of GST data was collected and during the course of a particular month, and how the total amount collected has been going up. And so I think something like that needs to be done when it comes to futures and options as well. And it's a low cost solution, because I'm sure the data already exists. It's just that someone needs to agglomerate it.
So, spoiler alert, Vivek, SEBI has conducted a second version of that study.
Okay.
And
but I haven't seen anything.
I mean, I got it from sources.
Okay.
So I think they will release it soon. The numbers are not that different from the previous study.
But then at least there is some, there's a new news point, and that can be hammered in. So,
yes.
So I think that is a good note to close this discussion on. And thank you.